Hey home builder, John here, your friendly remote CPA, and now we are back in QuickBooks. So we're going to talk about reconciliations, the importance of them, how they work. So I've learned a lot of home builders are intimidated by getting into QuickBooks and they would rather stay out of it, put it on autopilot, and they think it's a little too accounting centric for what their day-to-day tasks are. So it is great to bring in a data entry person or a bookkeeper, someone who can enter the transactions for you, but there are some really powerful checks and balances that you want to keep an eye on throughout the year. So at the end of every month, you need to be reconciling your bank account with your QuickBooks file. What does this involve? It involves receiving your bank statement, hopefully electronically in PDF format. And there's a few different ways you can get to a reconciliation. My favorite way is to go up into the gear icon and go to the reconcile feature. And they give you this nice tutorial, especially if it's your first time doing it. And you're going to open your bank statement and you're going to enter the ending balance. And you're going to put in the ending date. Normally, it's usually at the end of a month, except for credit cards. And then you can start reconciling. And you can even have your data entry person or your bookkeeper do this for you. And then there will be a list of transactions on this screen that need to be checked off one by one, according to whether or not they hit the bank account. And if you're using the bank feed effectively, a lot of these will automatically be checked when you open this screen, and it can make the reconciliation easy peasy and done in like 2 seconds. But some things that you want to watch out for are things that are old and uncleared. So all too often, I open someone's QuickBooks file and there's 5 or 10 transactions up here that are more than 6 months old. And what's even worse is when they extend into the prior year, because that means they could have played a role on the income tax return when, if they're sitting out here uncleared for this long, they might not be legitimate. So it is material and important, especially if you get into some transactions of higher dollar amount. So as you grow, you're probably going to want to delegate this task to someone else who's experienced in all of the nuances with reconciling. It can turn into a beast of a task, especially if they have to do a lot of research on the transactions. If they can't get this difference up here, it needs to be 0. And then you get a nice green check mark that shows that you've completed your reconciliation, and you get a nice finish button. And it is a really satisfying feeling, but just a few mistakes can really send your reconciliation in the wrong direction. You as the business owner, I highly recommend after this is complete, so that would be after your month-end close is done, you come in here and you can search for reconciliation reports, and it will show you, so you've got a drop down of all the accounts that have been reconciled. It will show you when it was reconciled, what the ending balance was, and if there were any changes to that reconciliation after the fact. So that would be someone going back into, entering a transaction that impacted that account after it was reconciled. And sometimes people can make changes to a reconciliation without even realizing it. So that's why it's important to close and password protect your QuickBooks at the end of every month-end close. But on the reconciliation report, there will be sections for uncleared transactions. And as the business owner, those are the ones that you want to take a deep dive into to find out why they're still there. Some examples of a legitimate uncleared transaction would be checks that you've ran during the last week of the month and mailed out to your subcontractors. So for example, if you send a check on the 27th and we reconcile the books on the 30th, it's likely that subcontractor hasn't cashed that check yet. So that would be a perfectly legitimate uncleared transaction. An example of an illegitimate uncleared transaction would be a check that you've written 6 months ago that still hasn't been cashed. So you want to either contact that vendor and reissue that check, or delete it or something, or make a journal entry to reverse it. It is not okay to have uncleared transactions for that long. The other thing that you'll want to do is in your chart of accounts, you want to go through all of your balance sheet accounts. So you can see them in your chart of accounts, or you can go to your reports and go to the balance sheet, and anything that shows on the balance sheet that's either an asset or a liability, we want to ask ourselves, how can we validate this balance? All too often I see builders have huge balances booked to something like uncategorized asset. And if they were going through the simple exercise of looking at their balance sheet every month and planning to reconcile to something, they would have noticed this huge balance in uncategorized asset, which, by the way, QuickBooks suggested they book things to that account from their bank feed, because you've heard me say it before, the bank feed is a trap. Once you categorize something in a certain way, QuickBooks thinks that you want to do the same thing over and over. So that's how they fell into the trap of categorizing so many things to uncategorized asset. But there's nothing to reconcile with uncategorized asset. There's no bank statement. There's no physical asset that you can look at to verify that it's still there. So that's a problem. Things like accounts payable, yeah, you can't really reconcile accounts payable, but what you can do is you can go into your AP aging summary in QuickBooks and do a quick skim through to make sure all of the bills that are listed there are legitimate. Same thing with fixed assets. If you do own some machinery or equipment, you can't necessarily reconcile to a statement, but you can look at the carrying value of that asset and do a mental check. Do you still own that piece of equipment? Is it still worth what it says on your books? Or do we need to get caught up on recording depreciation expense? Or could there even be an impairment situation? So I just want to stress the importance of reconciling as much as possible every month. Sometimes loan accounts are a lower priority. If they're charging you interest, you could theoretically do a catch-up entry all at once at the end of the year to record all of that interest expense. Just know that your books throughout the year will be a little bit misstated because you're planning to record all of that interest expense in the last month of your fiscal year. And finally, it is important to have a different person complete the reconciliation from the one who is reviewing it. It's an important check that you have in your system to make sure that everyone is being honest, because if you have the same person entering the transactions, doing the reconciliations, making the payments, if you have one accounting person who is simply doing it all, it is a little bit of a risk because they could go back to a prior month, change a transaction, somehow write themselves a check. So just watch out for that. But overall, I just want to stress the importance of completing the reconciliations, especially for your most active checking and credit card accounts. And someone of high authority should be reviewing the reconciliations, making sure they're accurate, making sure we don't have too many uncleared transactions. And once those are done, you should be able to close out your month and rely on your financial reports. So as always, thanks for watching and have a great day.